Hello everyone, it's Maximus with Crypto Talk. Now, Celsius may have possibly avoided a liquidity crisis by creating a Ponzi scheme solution. With that said, let's get right into it. So for instance, it mentions that there was a document on the New York court's website that suggests after facing a liquidity crisis, Celsius started offering a double-digit interest rate for attracting more funds that would cover earlier depositors and creditors. This comes straight from Twitter. It mentions faced with a liquidity crisis, Celsius began to offer double-digit interest rates in order to lure new depositors whose funds were used to repay earlier depositors and creditors. Of course, you can read the full conversation if you want for more details on the Twitter link. It goes on to also mention, essentially, Celsius asked for more money and offered an even greater interest rate to cover liquidity issues on the previous loans. If you know anything about Ponzi schemes, you know this much. Whenever you have a situation in which the institution or the person doing the lending and producing a higher yield back to you promises high yields for new investors, but instead repays the old investors with new investor money, you have a problem with a Ponzi scheme. The scheme used by Celsius for solving the liquidity crisis looks similar to a traditional Ponzi scheme, like I mentioned, which survives only with constant inflows into it. Such a decision can help a company in the short term and solve issues with liquidity and the inability to pay out initial deposits, kind of like what I just mentioned. But at a certain checkpoint, Celsius will have to repay the interest it is offering today, and it's unclear if the crypto bank will be able to do so considering all the pressure on it. With that said, during the cryptocurrency market turmoil, Celsius, of course, as we know, halted withdrawals as the company failed to provide enough liquidity to maintain its operators and fulfill withdrawal requests. The rising tension in the community caused a panic among Celsius investors that caused a 50% plunge of the token. Later on, the Wall Street Journal reported that Celsius is facing bankruptcy as the company hired consultants who are aiming to resolve the existing issue as securities officials started investigations into the matter. Previously, as we know, Celsius successfully covered some of the existing loans and withdrew almost 24,000 in wrapped Bitcoin from MakerDAO DeFi platform and then transferred some funds onto the FTX exchange. So, with that said, that is the latest in regards to what is going on with Celsius. Do you feel as though that their Ponzi scheme solution, if you will, is going to basically buy them out of this, or bail them out, I should say, of this crazy thing that's going on with them? Or do you feel as though that this is just another thing that's going to set them back because they're still going to owe all the existing money to new investors as well as what they already paid off with the old investors? You know, at the end of the day, these solutions may seem like a temporary fix to fix the band-aid of a poor solution to begin with. With that said, will Celsius be able to survive, or will FTX and the likes of other exchanges basically come in to sweep in and buy them out? At the end of the day, only we will be able to see what will truly happen. But in such volatile times, would you really want to trust the likes of a Celsius moving forward? So, like, comment, subscribe if you haven't done so already. Let me know what you think in regards to the likes of Celsius. Thanks for watching. May you all have a blessed day, and we'll see you on the next one.